Yo, it's your boy Felix. Welcome to the first video of my YouTube channel, and in this video it will be on market structure. So if you like what you watch, don't forget to like, comment and subscribe, and see you guys there on the chat. So now we're on the chart. I'm currently on the S&P 500 or the US 500 index. Remember what I said, when given a chart, the first thing you always do, always go up to the highest time frame, the monthly time frame, because that gives you the overall perspective of the market. And let's say, like I said, the market doesn't move in a straight line. The market wants to move from point A to point B in an uptrend. It won't just move like a straight line zoom. It's gonna go in a wave, in waves. Like for example, I can draw the wave right now on the S&P 500. I'm on the monthly time frame, so you can see the market moving. This is a high, so moves down here. Look at this, down here, up, down, down, down. So it's not just in a straight line from point A to point B, it moves in waves. And this wave is what we study, because the pattern is what we study. We study the pattern. You study this pattern, you can know more about the interaction between buyers and sellers, because what you see right down there is just basically demand and supply. Let's say for example now you had so much demand in the market, and that pushed the price upward, because from the laws of demand and supply, when demand is high, a lot of people tend to buy because it's at a very low price. So when it's a low price, a lot of buyers jump into the market, and that pushed the price upward. So imagine buying from this area, and at this level, you're already at this level. The next thing that comes to mind is you want to leave a position in order to make a profit you've made over the years, because this is the monthly time frame. This is from 1980s or so down to this level. This is from imagine buying from 1974 and the price went to as high as this level. You bought when the price was $61 and the price went to as high as this level, 1,561. You've made so much profit. A lot of people are no longer interested in buying anymore. That pushed the price downwards. So at this level, this is a cheap area, because the price is low enough for people to jump in and put buy. And at this level, the bought at $691, and they went up to as high as 3,386, which is a very good profit. And people sell that position, and that pushed the price downwards. And people buy at this level, and buyers push the price upward. So you can see the market don't just move in a straight line, it goes up and down, and that movement is based on the interaction between buyers and sellers. Where does the Elliott Wave fit into this? I told you Elliott Wave is used in a trending market. This is a trending market. Why that is a trending market? Because I can see it's so obvious to say that the market is making higher highs and higher lows. This is a low, a higher low. This is a high. This is a high, so these are both highs. So you can see they're all on the same level. The market didn't just range. So these are high, this is a high, and this is a high. So this is a high. So high is like the place where the market, an area where the market refused to break above. So a massive resistance was down here at this level, where the market couldn't break above this region. So these two areas are both high. So it's not higher high, higher low. This is high, this is high. So the next higher highs you can see in this market is down here. This is a higher high. So once the market makes higher highs and higher lows, then automatically you're in an uptrend. So overall, this market is making higher highs and higher lows. So it's an uptrend. So that's the first thing. Always get direction when given the market. Get the direction of the market. Where is the market going to? Is it making higher highs or is it making higher lows? The next step is, how can we fit the Elliott Wave into this? I told you, use Elliott Wave when the market is making, use Elliott Wave in a trending market. a trading market could either be an uptrend or a downtrend, and in this case, it's an uptrend. The first wave I could see, wave one, is this wave one. The second wave is this, wave two. Third wave is this, wave three, wave four, and wave five. Remember what I told you, always trade in direction of the trend. If it is an uptrend, your main goal should be trading the impulsive wave, not the corrective wave. Look at how massive this impulsive wave was. Look at how massive it moved. And look at how small this corrective wave pattern is. So really, you can't really make much profit from this move, depending on how much of a trader you are. If you're an experienced trader, you can trade that market. But for beginners, I always say focus first on the impulsive waves and try to let go of the corrective wave for now, because in positive wave is a high chance you trade in direction of the trend. There's a high chance of you being in profit whenever you trade in direction of the trend. So this is the fifth wave. And remember I said the third wave is never the smallest wave. The first wave could be smallest wave, the fifth wave could be the smallest wave, but the third wave is never the smallest wave. So currently, right now, we're on the fifth wave. But before I go further with my analysis, let's take a look at the fractals of the wave. I told you about the fractal nature of the wave. There's always a repeated pattern of the wave. So if I'm to observe the third wave, since this video is all just about market structure for a start, I usually use the Fibonacci retracement tools and the Fibonacci extension tools in order to aid me towards getting these various fractals. But from the third wave, I can literally see the fractal without even zooming, without even using the Fibonacci extension tool. For those of you asking what's the Fibonacci extension tool, it's just a tool used to know your profit target levels, to get the next level of the next wave. That's how I see it. So I can literally see that there is the first wave already from the fractal nature of, I told you it's a repeated pattern of the wave. So this is the first wave. So if I just change the color and start all afresh. So this is the first wave, the second wave, third wave, fourth wave, the fifth wave. Increase the size. This is the first wave, second wave, third wave, fourth, and fifth. This is from the fractal nature of the Elliott wave. Similarly, I can also try to analyze this wave from the fractals of the first wave. So if I get my drawing tool, I can see that it's so obvious. I can see that there's the first wave, second, third, fourth, and the fifth wave. So these are the fractals, the third wave fractals, 1, 2, 3, 4, 5. So you usually have repeated 5. So I told you an impulsive wave, they have a 5-wave pattern. So this is a massive third impulsive wave. And within this third impulsive wave, is also a 5-wave pattern within this third impulsive wave. And also, if I'm also to zoom in into the one end of the fractals of the impulsive wave, like say for example, I take this small fifth impulsive wave, I will also see a 5-wave pattern within it, which is this already. I can see this already. Look at it. It's 1, 2, 3, 4, 5. As you can see. This is 1, 2, 3, 4, 5. And that marked the end of the third wave. So right now we are currently on the fifth major wave. Can we get the fractals of the fifth major wave? Sure, we can. Clearly, we can see that this is the first impulsive wave. This is the first wave. Second, third, fourth, and fifth. But how are we sure that this, what I did is the right thing? You can also make use of a Fibonacci extension tool to be very sure. So extension tool, you use extension tool to get profit targets. To get a profit target, use the extension tool. So like I said, I won't make use of any indicators. So let me take out this volume and this put down. You know. For the Fibonacci extension tool, you give extension tool. This is a minor trend. This first wave is also it's a trend, an positive trend with a retracement. So at the beginning of the first minor trend, you click here, the end of this trend, and your retracement. So basically, you used the previous trend to get the next extension level, and you usually get a target level at this area 1, this or this range 1.618. So if you can get a 5-wave pattern, and this 5-wave pattern fall within this level of 1, remember I told you the third wave is always an impulse. The impulsive waves are 5-wave pattern. So if you can get a 5-wave pattern that falls within this level of 1, then that marks the end of the third wave. Or if you can get a 5-wave pattern that falls within this level of 1.272, that marks the end of the third wave. Or if you can get a 5-wave pattern of the third wave that falls within this level, this is the highest can ever get. The third wave, this is the highest can ever get. This level of 2. So depending on the fundamentals, if you have so much news that make the market, or you have so much demand in this market, since it's an uptrend, we have a lot of demand in the market. So let's say demand in the market, the demand pressure was really high, and it pushed the price. Up a lot. You can get it as far as this level, but you can't know because we can't really see much information because we are on a monthly time frame. But already I can see that this is the smallest. This is a smaller first wave, second wave, maybe third, fourth, fifth. I don't know, but I have to scale down to a lower time frame to understand the fractals of this, to know if we have at the end of this third wave and we're on the fourth wave. So I go to the weekly time frame. This is the wave 1, wave 2. So if I get my extension tool also, I could see the first wave here and the retracement. How I analyze the market structure. So since I can't see the candlestick properly, I can make use of the Kanashi candlestick to see the candlestick properly. And already I can see that this is the first wave. This is the second wave. This is the third wave. Because you can see this. Let me draw it. This is the first wave. Second wave. Third wave. Fourth wave. And fifth wave. So meaning, place in green, meaning if I go to back to the monthly time frame, and I put it back to the candlestick pattern, we are still in the major third wave. And the third wave, in the major third wave, we are not done with the major third wave. So if I draw this perfectly well, we are still within this third wave. So if I'm to get my Fibonacci extension tool, we are definitely going to expect a reversal at this. The third wave might end around this region. So like I said, if you can get a 5-wave pattern within this level of 1, then the third wave has ended. But we couldn't get a 5-wave pattern within this. Instead, the third wave ended at this region. So this is the third wave. It ended at this region. So we are currently in the fourth wave pattern. And after the fourth wave, then we are in the next wave to target is the fifth wave, which is the bullish wave, which could end either at this level or this, depending on where the 5-wave pattern ends. If the 5-wave pattern ends within this level, then sure. If it ends down here, fine. Or if it ends here, this extreme can always get the level 2 of the Fibonacci extension tool. So right now we're currently in the impulsive, we're in the corrective wave, which is the fourth wave of the major third wave pattern. Our next target is the fifth wave. But before I get to the fifth wave, remember I told you about the corrective wave is always a 3-wave pattern. The corrective wave is always a 3-wave pattern. Just because we're on the monthly time frame, we can't see anything right now on the monthly time frame. But I can see already see an A, B, C. But if I scale down to the lower time frame, you can see what's happening on the fourth wave, which is a corrective wave, which is a 3-wave pattern. As you can see already, this is the fourth wave. This is the fourth wave. Okay, my tool is A, B, C pattern. The A wave could either be a 3-wave pattern or a 5-wave pattern. The B wave is always a 3-wave pattern. The C wave is always a 5-wave pattern. I can't really see much information, but I can only see the overall 3-wave pattern, the A, B, C pattern. So what I'm going to do is that I'm going to scale down to a lower time frame, the daily time frame, in order to get more information. I'm currently on the weekly time frame, so I'm going to scale down to the daily time frame to get more information on what's happening within the market. As you can see already, it's quite obvious. So I'm on the daily time frame, guys, and on the daily time frame already, I could see that this is a 5-wave pattern. This is wave 1, wave 2, wave 3, wave 4, and wave 5. The B wave pattern, I can't really see it. Maybe if I scale down to the 4 hours time frame, I'll be able to see the 3-wave pattern. But the C wave is always the 5-wave pattern, like I said. So I could see that this is wave 1, wave 2, wave 3, wave 4, wave 5. So what's happening next now? We're on the 5th wave pattern, we're on the 5th wave. At the end of this 5th wave, so if you can count a 5-wave pattern of this smaller 5 wave, that will mark the beginning of this big, massive 5th wave move. And how do we know that? We can do that by going down to the lower time frame. Going down to the lower time frame to see what's happening down here. So at the end of this 5-wave pattern, because it's an impulsive wave, you have 3 impulsive waves and 2 corrective waves. The B wave is always the 5-wave pattern, and within this 5-wave, the C wave is always the 5-wave pattern. And within this 5-wave pattern, you have three impulsive wave and 2 corrective wave. And currently we're on the 5th impulsive wave. The end of this 5th impulsive wave will mark the beginning of this massive bullish impulsive fifth wave. So how do we know? We know by going down, scaling down to the lower time frame. So we'll go to the 4 hours time frame. I still can't see much information, but if I can't see, you can see the gap in the market. What I usually do is also make use of Heiken Ashi. If I see such stuff like that, I still can't see more information. So I'll go down to the 1 hour time frame to still get more information. Go back to Heiken Ashi. Still can't see information. Go to a lower time frame until you can sell information. That's a clear pattern. That's why I trade. So go to the candlestick. Wave 1, wave 2, wave 3, wave 4, and wave 5. Yeah. So watch as the price tested this region. You can see. What we see, this was wave 1, wave 2, wave 3, wave 4, and wave 5. So, and within this wave 4, you can also have the fractal nature within it. No, I can see there's an invisible 1, 2, 3, 4, and 5. You can see. So the end of this fifth wave, this smaller fifth wave, marked the end of this bullish massive move. You can see this is the fifth wave which ended here at this area, and what came next was it up higher highs and higher lows. So it means a reversal, an uptrend came next. So this is wave 1. So we're now in the major fifth wave. So you can see this 1, 2, 3, 4, 5. What came next was a retracement, and after this retracement, we're now in a massive third wave pattern. If I draw this, if I use my Fibonacci extension tool, this is what the retracement. So this is what to expect. This is wave 1, which we already had, wave 2, wave 3, wave 4, and wave 5. Wave 1. So currently we're now on wave 3. Which is an upward move. So this is wave 3. So now we're in an upward move. So you can also count the fractals of this to place your entry. But today's video is not about entry, just about market structure, analyzing market structure, just to show you guys how the market moves, you know, like how the market moves and how you can take that into your favor. I'll also do another example. The second example I'm going to do today is on US 30.